Acknowledgement of country, so we've done our acknowledgement, but it's worth looking at the benefits that Indigenous perspective holds from a natural capital perspective as well. That's of interest, so I think that's something that is quite interesting in an investment sense as well. So what are we doing and looking at today? We're going to explore the definition of natural capital, why it is useful, look at what natural capital production landscapes are, and then look at the viewpoints from the grower, pastoralist, landowner perspective, as well as then the investor perspective of what their interests are around it, and then consider what good looks like for you. Also then looking at how you could potentially get there from here, incorporating natural capital plus agriculture. And today I'll be looking at some specific desalination and energies examples just to make it real for you. And then we'll wrap up with the next steps and conclusion. So what is natural capital? Natural capital is basically the plants, the animals, the air, the water, the energy, the soils and minerals that provide benefits to people and are used by industries, households and governments. So it's a wide definition. Natural capital accounting is a mechanism to account for the value of these natural capital assets and that provide physical and economic measures of stocks of natural capital and flows of ecosystem services. And this is important in the sense that there's a fundamental framework that's used called the UN System of Environmental Economic Accounting, of which everything is based on. So that's important from an investment perspective because it provides standards that everyone knows and recognises. The SEIA, as it's known, began in 1993 and is still working today, and it's evolved over time. And it continues to evolve as an ecosystems accounting standard. The economic value of ecosystem services is huge, as we know. It's worth trillions, we know that. Just had exactly how much it's worth is up for debate, but we know it's fundamental to everything that we do. With natural capital accounting, it is really the method of systemically measuring and reporting on these natural capital resources, their extent and quality, types and amount of benefits that they provide and the value of these benefits. An example I can show you or have here is accounting for nature, which is one example that uses the SEIA. One thing I want to mention coming from government, but is the importance of government data in all of this, in particular for natural capital accounting and also in particular for investment. It's really important to have confidence in the data that's been looked at and assessed and considered for investment purposes, and so the government has a critical role to be able to provide the standards, and in these cases some examples of some of the reports that they've provided over the years. There's also organisations like the CSIRO which provide some really good reporting already on ecosystem services and state and transition methodologies. And one example that I was going to draw to your attention today, if you haven't seen it already, which is around the West Australian wheat belt, which was a recent study that was completed this year. So that's comprehensive and very informative around what natural capital brings and looking at its state and transition over a long period of time. In this study, it was from 1988 through to the present day, so it's comprehensive, and that's really important in that it's on a large scale. When we look at natural capital production landscapes, they are a large area, regional scale, that integrates primary production, such as farming, pastoral, forestry and fisheries, with the sustainable management of nature. So it's a large regional scale with primary production. Natural asset companies are companies that are based on natural capital and use natural capital accounting to define and describe their works and achievements. So that's one thing that this project that I've been working on considers is, could you have a natural asset company that manages a natural capital production landscape? So the project that we're working on looks at how can natural asset companies in production landscape enable sustainable benefits from natural resources while creating positive long-term benefits for both people and nature. So it's the production and the nature that goes hand in hand together. And the project then looks at to understand the WA grower perspectives around that in managing natural resources and agricultural systems and attitudes towards listing nature as an asset class. And then also we've looked at investor interest in nature capital with regional scale agricultural production systems. So this is the formula that I want everyone to remember today. If you always tend to remember 3 things in a presentation, this is one of the ones that I want you to remember. With natural capital plus agriculture, you get reduced risk and diversified returns. You reduce your variance, you reduce your variability. It's a new kind of equity that you could have, but fundamentally this is a practice that farmers know anyway. I mean, if you have good use or good management of your natural capital, you'll benefit in your agricultural production as well. So it's nothing new, but what we're talking about is something on a large scale to interest investors. So it's the reduced risk and the diversified returns. So all the ecosystem services that come within natural capital, such as carbon farming and energy and biodiversity, all start to diversify potential returns in addition to the production that you have already. And then the other big thing that I want you to remember today is collaboration. So if you're going to talk regional scale, you really, at the end of the day, look to consider collaboration, and that's something that farmers are very good at historically. Grower groups and NRMs, of course, are representative of that. Basically, collaboration is critical to be able to achieve something that the sum is going to be greater than its parts. So nature as an asset class in agriculture, allowing stakeholders, including grower groups, communities and investors, to participate and potentially have equity in sustainable growth by leveraging ecosystem services within regional landscapes. And this covers energy, water, primary production, carbon, biodiversity, biodiscovery, soil, native vegetation, cultural and social. So it's huge. And I'm a very poor artist, so I've leveraged off this AI innovation, and this is a picture that's meant to represent a group of farmers looking at a regional picture of their area that they're working in and considering how they might be able to collaborate together on this natural capital that they manage and own. A couple of examples just to make it tangible in that sense is the example of Hay in New South Wales, which is a town that's now going to be entirely powered by renewable energy, and the farmers around that town have been engaged as a community project to basically hold the solar and the wind resources to enable that to happen. So that's a real example of a community-led project that's on a large scale that is able to produce income and benefits for all the participants, including the farmers, and giving the farmers consistent returns, diversified income, and build resilience and reduce their risk of production. So there's a good program on the ABC that I'd recommend about that. Also in Denmark the country in Europe, the wind farms are community-led projects. So these are basically the community invests in the wind farms for the renewable power. So I think that's another good example. So what does good look like? So that's the third question I have for you today once we've gone through this is consider what does good look like with the natural capital, the ecosystem services, the collaboration potential on a regional scale. What could it look like and how would it suit your group and your area? And this is in regards to economic empowerment, sustainable agriculture, environmental resilience, because if you can do things on scale, you can get a better outcome at a regional scale, as you know. So to be able to then provide some sort of investment surety around that is going to be both a private benefit and a public good, which is where the government needs to also get involved to assist. So when you look at this natural capital production landscape, depending on who you are, you'll look at it in a different way. So from a grower and a primary production perspective, it's an addition to what you're already doing, and it could potentially bring additional benefits and revenue for you. From an investor perspective, it's an enhanced value to what is already there. So it could actually make primary production and agriculture more attractive potentially to them, because you're giving them something that's less risky, more resilient, and is able to provide multiple revenue streams across ecosystem services. So that's worth considering the way that they look at it. And when we recently went to Sydney, Melbourne, and I've also just been to London to talk to investors. We've done about 27 hours of interviews across those groups. That includes superannuation, insurance, banks, both retail and investment, venture capital, so a broad cross-section of different types. The superannuation funds, of course, are very important. So we've spoken to all of them, and this is some of the thinking that I was going to share with you about what they think about natural capital when we talk to them about it. They think that with natural capital it's a bit woolly. They want tangible outcomes, they want real projects, they want to see deliverables around a project or program of work that is measurable and has deep milestones and good governance. So that's probably not surprising, but that's what they said. They see the challenges will be around standards and measurements of how natural capital improves or declines. So they want to see how that might be able to be proven up. They also are very interested in why would the growers want to actually get involved in anything like this, what's in it for them, what's of interest. So they're keenly aware that you've got to have an enrolled and engaged group to be able to make it a success. There's varying attitudes to risk within the investor group, which is probably of no surprise, but some would say that you should just take it slowly with one ecosystem service at a time, or others would think just go for broke and then you'll get the best outcome and best return because it'll work itself out along the way. So there's various attitudes around how the risk and approach would be. They, as I said, tend to think of things in projects and programs, and that actually fits quite nicely with a set of ecosystem services when you think about natural capital. They were interested in what sort of investment vehicle, be it an equity, private or public, or how would it be actually constructed, which is going to be, I suppose, something that also from your point of view would be of consideration, because there's, I suppose, one of the ones that I'll mention is more like a cooperative type structure as well. So that all that can be considered in how this thing might be able to be put together. They don't like government. They think that the less government involvement and less government interference, the better. So they tend to want to see certainty and consistency, especially with these sort of projects which are very long-term in lifespan, about 15 or 20 years to get a good natural capital project completed. So they're very, very concerned about the potential for government interference on that. Also within themselves, education and resourcing and capabilities. So they're well aware that natural capital is coming over the top of ESG. So it's like they're almost overwhelmed with ESG as it is. So to put natural capital over the top of all of that is something that they're finding quite challenging. And often the way that they assess risk is quite out of date when you look at it from a natural capital context, and would need to be adjusted. So there's a huge education and resourcing and capability within their own organisations to be able to manage this. So there's just some that I thought would be of interest to you, some key insights from these discussions. The investors know intellectually why they don't invest in agriculture, so it's probably well known that less than 1% of money in the superannuation funds, for instance, is in primary production, which is really quite astonishing, but they see it as primary production as too volatile. So it's interesting to hear that, because then if we can come back to them and say, well, if you have good natural capital and good primary production combined together on a regional scale, that's reducing your risk and reducing your variability. Could you consider, you know, this to alleviate the concerns you have around the risk that you perceive agriculture at the moment has? So it's that sort of thing that I think is really interesting as well. So intellectually they've justified why they don't do it, but fundamentally they know that there's a systemic risk for their portfolios. So they know if they don't do anything, it's not good enough, because they have to do something, because basically all their investments are going to be impacted if they don't. So we're at that juncture now where we have to have a group of investors, or a large number of investors, who would want to invest and intellectually have justified why they don't, but they're at that point where they're going to have to somehow crash through. And that was one of the comments that we got from them, is that they've got to do something despite all the issues that they have and the challenges that they face with this. So just to close out with the investors, the scale, the format, the fragmentation, those were other issues that they found with regards to the concept that we had of a large-scale regional natural capital production landscape. Some current examples. So if we want to consider how we could get there to this this concept of a natural capital production landscape as an equity type structure, some of the examples that I can cite are the Godot Farm Growth Farms. Two of the organisations that we've already spoken to are already doing this sort of thing. So they basically will buy a farming business and landscape, and then transition it towards a natural capital improved environment with a business case that doesn't, interestingly, just rely on carbon credits. That's a nice to have. It's actually a whole lot of other things that they build around natural capital, which is very, very interesting in that they both don't build carbon credits into their business modelling. That's just a nice to have. So think of it, when you think of natural capital, you think, as I said, in a whole set of ecosystem services that build upon one another to form this value proposition and drive their value outcomes in the projects that they're doing. Intrinsic Exchange Group was is a company that looked to list on the New York Stock Exchange some equity natural asset companies at the beginning of this year. Unfortunately, they were shut down because the perception was that it was a wilding exercise, that they were going to take away production and turn it into natural nature, which wasn't what they were intending to do. So they're reforming and regrouping to continue to pursue this model, which includes production. And I can't emphasise that enough, that production it's very important to maintain, and the production should benefit from the natural capital when you look at this from an investment perspective and from a primary production perspective as well. And there's other organisations. I mentioned the Mutual, so the Regen Farmers Mutual as a cooperative is an interesting structure, and they're active at the moment in Australia, and Kilter Rural is another listed company. So these are all examples of companies that have a particular interest and usage of natural capital and benefit from. When you look at a natural asset company, you would quickly, to go through this, look at its assets, the assets that you could have with the ecosystem services. You would then look at providing those ecosystem services in some sort of corporate structure, and then some sort of capital market process. I won't go into that today, but just to say that when we look at this evolving market, there's a lot of standards like the TNFD and others that are looking to recognise natural capital as financial assets. So that's very important as well. So it is happening, the concept of this asset as a natural system. And then I was just, I suppose this is also perhaps a bit too detailed, but it's really to emphasise that when you look at your regional set of accounts from, say, a farming system, you'll have a balance sheet, profit and loss and cash flow statement with you. When you add in the ecosystem services, it starts to expand that financial statement and make it more articulated. So I think that's really interesting, because you can then say to investors and also to other financial organisations exactly what you're doing in much more detail than you are at the moment. So the benefits. What does it mean for primary production? Well, you get water retention and hydration, temperature regulation, soil erosion reduction, biodiversity, and soil health. So there's all these benefits that come with this approach. Now, today I was just going to talk about some examples around desalination and circular economy. So Richard will talk more about this one, which is a farm that I visited a couple of years ago at Wongan Hills, and this farmer had managed to reclaim, I think, about 70 hectares or quite a 30 hectares. Yeah, so 30 hectares of land, which is considerable, by literally putting in a desal plant, dropping the water table, and enabling the salinity to be reduced, and in the process be able to recrop. So there's a picture there of the before, where the land was saline and unusable, and after, when we're there, with the cropping reinstated and the land's now productive again. So I think that's a great example of using natural capital to basically drive an outcome. And you can do that with renewable energy, and to be able to drive that is, I think, really exciting. As renewable energy becomes cheaper, it's going to become more and more viable to be able to do this. There's other uses. So with cheap energy, so you've got lots of land, you've got lots of a source of energy that's going to get cheaper in the renewable energy. So you have the opportunity to then look at other ways of making money. So the example I was going to have today is of plasma leap, which is basically enables the fixing of nitrogen out of the air to be able, 1 minute, okay. So that's then able to produce fertiliser and fuel. And there's other benefits as well. When you look about, one of the questions about the desalination is, and Richard will talk about this more, is the salt and brine that's produced, but you can actually look at monetising that in a circular economy sense. Just to say that we are doing these presentations through to the end of the year, and then writing some papers which will be produced with UWA, and I hope you can fill in the survey to assist us in doing that. Thanks very much.